Good Monday morning, guys. My name is Jerry Miller, and this is Real Talk with Keith Smith. Thank you kindly for joining us live on all social platforms in downtown Charlottesville in our building, the Macklin building, on the I Love CVille Network. A show today presented by Keith, Yonna, and Yes Realty Partners, a name you can trust, Yes Realty Partners. Today's program, my friends, is dynamic, and we encourage you, the viewer and listener, to shape the conversation and the direction of our content by asking questions, by putting perspective in the feed, just being provocative and letting us know what's on your mind. We will adapt to you. Today's program features a panel of experts. Jeremy Rowe, you know well, I believe it's his third rodeo on this program, the agency owner at Goosehead Insurance and the Jeremy Rowe Insurance Firm. Maggie Gunnels is in the house too, of her namesake, the Gunnels Group. I think the logo and the website are fantastic. I do say so myself right there.
Absolutely.
Judah Wickhauer, the director, the man behind the scenes. If we can go to the studio camera and let's welcome the experts to the show. My friends, good Monday morning.
Thank you.
Good morning, everybody.
Yeah.
It's great to be with you. Keith, another fantastic panel, my friend.
Yeah, you know, one thing I love about these fantastic panels, I just get to sit back from time to time and listen and maybe not talk so much. Okay, maybe I will talk a little bit. So look, we normally, Jerry did a great job to intro everything, but, you know, Jeremy, just a quick thing, tell us a little bit about yourself. How's the business? Tell us how we can work together, particularly between the real estate business and your business. Where's the connection there?
Sure. So I work a lot with real estate partners and mortgage lenders here in the area. A lot of my business that I do is on the new home purchase side. So I do all home, auto, all personal lines products with the exception of health insurance. I don't do health insurance, but I do personal lines products, and I work frequently with new home closings. So I broker for about 70 different companies, and that's one of the things I wanted to touch on today because the insurance world is changing quite a bit. There's a number of carriers that are changing their regulations or pulling out of the market altogether, which is really fascinating right now. But I broker for about 70 different companies, and so when someone is going through the home buying process, they're either buying a home for the first time or maybe it's their third or fourth purchase, I'm able to shop the market and find the best rates and the best coverage as far as home and finding package rates as well, if they're going to do their auto insurance or umbrella or any other product. So I work frequently, like I said, with realtors and mortgage professionals, and it's been really good. It's been a busy summer. I've had a couple of vacations with the family, which is a nice needed break, but my son started school today.
Ooh.
So I was very glad to drop him off, and we're going to start the next period of consistent schedules again with school and with work.
So what, first grade, what grade?
He's in kindergarten.
Oh, so
yes.
Time out. Now we got to
Yes.
talk about that. So I've got a whole theory about this
Okay.
that's going on, because maybe it might have just been my daughters, but when we dropped them off, they just didn't even say goodbye. They just bolted right to the door or to the bus.
Well, that was pretty much the case with this.
Yeah.
So he goes to a Montessori school, and so they actually have a preschool that is integrated with the kindergarten. So for the first 2 years, they'll do a half day, and then kindergarten becomes a full day. So what's really nice about that is he was already used to the classroom, the environment, the teacher, and everything.
That's great.
So it was more just going back to school, but now he's going to be learning more. He's going to be staying for extended hours. And on Wednesday, my 3-year-old daughter is going to start her first round of preschool at the same school.
That's fantastic.
She's ready to go. She would have stayed today if I would have let her.
Is that why you're so happy right now?
I'm very happy. Well,
No, it's because you're with us.
I'm very glad to be here. Yes.
So
I
Maggie,
know the feeling, Jeremy. Our oldest, now in kindergarten, and I don't think there's anyone more happy right now than my wife, who absolutely adores our oldest. But the summer, as you know, Maggie, can be quite a bit long,
Yes.
especially in the dog days of August, my friend.
Yes. It's time when it's time.
Yeah, that's exactly right.
let me write that down.
I will tell you, I did shed a tear when I dropped my first grader off, which is the first time I've ever shed a tear.
Well, that's your baby, right?
Well,
that's why.
I was like, why am I crying?
But how did the first grader do it? They was like, bye, Mom, and
Yeah,
just
she was like, no kisses, no nothing, just don't do that.
don't embarrass me.
Don't embarrass me.
In front of the
And
other
I'm
kids.
still like rolling down the window like, no, look at me. Blow me kisses back.
So Maggie, I'm always excited to have you on because, you know, you and I have been around the Lake Monticello market forever.
Yes.
So I kind of really want to take a little bit of a deep dive into the lake market today and what you're seeing from your perspective, and then how Jeremy can help with the insurance. And he just mentioned before we went live that Lake Monticello is one of his growing footprints in his business. But
great.
Kick it off. Tell me the state of Lake Monticello real estate right now. I know I've got a bunch of numbers in front of you, but what from your perspective, what are you seeing there?
Sorry. It's super strong. I mean, it's amazing. Jeremy and I were chatting about the average sales price, and I think it was, what was it, 20?
It was just below 200,000 in 2016,
right?
And now it's right around 350. That's
right.
That's not 100%, but my goodness, that appreciation over 7 years is amazing.
It's huge, and then when you even look back at just 2020, I mean, we were all thinking 2020 was a year of just a huge growth, but 3 years we've already gone up $100,000 from 2020 to 2023. So it's fascinating to see these prices, and even the waterfront prices. I mean, it's amazing to see that we now are consistently seeing waterfront sell for over $1 million. I'm not certain I really ever thought that would happen, which is awesome. It's great for the community.
Yeah, it's a double-edged sword, and I might take a little bit of the a little bit of the opposite side of that coin for the moment, because where are people going to buy? Where's the affordability? That kind of thing.
Right.
But I'll tell you, the acres right at Lake Monticello, I developed it. I lived there. We just had a home sell with a 7 in it.
It's amazing.
Amazing. And this is not helping my desire to stay there, because Mrs. Smith wants to leave, wants to sell.
Where are you going to go?
See, there you go. Maggie, you're 100% right.
Or to Maggie's point, you say, why sell it?
Yeah.
If you're going to go somewhere else, buy it, but why sell your current one? Is that your point?
And hold it. Oh, I mean, I love holding real estate. If you can hold on to it, hold your asset, hold your money in the house, and don't sell it, and go explore another area, and then move back after you realize you miss it so much.
Yeah, so I agree 100%. That is kind of the path that we're on, frankly. But it's when I finish the show today, I've got 3 grandkids, 2 daughters, no son-in-laws because they're all working, and Yonna and I in the house, and the house has just fit perfectly for that. So Jeremy, from a investment perspective, right?
Sure.
Is there any different insurance perspective on your end of it? So if I rent my home and buy keep it as an investment and move in, what does that change my home insurance?
So it's a different policy altogether if you're doing that. If you were to move and you were to keep the home and you were to write it from a homeowner's insurance policy, you would actually convert it to a dwelling policy. And a dwelling policy just has some different characteristics to it. It can be an investment property. Some insurance companies will do it as a short-term rental. Some would want it as a long-term rental. And one of the biggest differences between it is that it's going to be taking on a lot of the personal property that you're going to have on your home, and you're going to want to make sure you've got strong liability that's on that policy if you're going to be renting it out. One of the things that's interesting, if we're talking specifically about Lake Monticello, that I've noticed, and this is veering away from your question a little bit, but just as you were talking about some of the aspects there, we were looking at the average sales price, but as you were mentioning, there's lakefront property, there's other properties in there, so that's the average. So that means that there's still some of the homes that are going to be in that lower 200,000 to 300,000 price point that are in that neighborhood. And I mentioned earlier that I'm seeing a few more of the homes that I'm insuring coming from the Lake Monticello area. And I think it is because of some elements of affordability for first-time home buyers that are looking at some of the properties that are out there. One of the other things that's really nice about the lake is a lot of insurance companies will actually have discounts for being in a gated community.
Plus it has its own fire department?
It has its own fire department, which even though you're further out from the Charlottesville city center, you do have the fire department there, which makes it in a different protection class, even if it's not public water. If you're on well or septic, the fire department being there is a huge plus. But being in a gated community for a lot of insurance companies, they actually have a discount if that's
and if you have like a fire hydrant within a certain distance of your home.
Sure. The closer you are to a fire hydrant, the better. The closer you are to the fire department, the better. Yep.
So days on market. I love days on market. So that'll be slide number 3, Judah. Back in 2016, in the first quarter, we were over 80, roughly 85 days on the market. We are
Right.
now 5 to 7.
And that's not a terrible 85 days on market is
That's
not
what
the
I
end of
wanted
the
to
world.
talk to you about.
Yeah, it's in fact, Keith, tell me if you disagree with this, but I've always understood.
I would never, first of all, I would never disagree with you. I'm way smarter than that.
Well, thank you.
Because I live in a house full of women. I know how this works.
That's funny.
Yes, Maggie. No, Maggie. Yes, Maggie.
Exactly.
I know.
But so under 90 days, I've always understood under 90 days to be a seller's market.
Oh, God.
Right? Or we've had this conversation, I feel like, but you do disagree with me on this.
No, I don't. I agree with you, except I don't think 90 is the new normal, right?
Right. And that's maybe where we were discussing. What do you think the new normal
Well,
is?
I mean, if you take a look at it, even in the middle of COVID, on the first quarter, we were a little over 30 days on the market. And that was when the world was going to end.
Right.
And we're like 21, 22, and 23, we were basically hovering around 5 to 10 days on market. It's kind of
amazing.
The norm. Yeah, so, it's just, I think the new norm is not 90, but historically, right, you would talk to other professionals who have been in the business for a long time. When you
Right.
hit 90, that's when it moves from a buyer's to a seller's or a seller to a buyer, depending on where you're at the moment. And that's what I want to delve into your expertise is, what do you think that new number is? What do you think that new number is that is going to be switching over from a buyer's or a seller's market?
Because right now, undoubtedly a seller's market. So he's
Absolutely.
asking when are we in a neutral market, I think is what his question.
Yeah, that's
From a DOM standpoint.
That's a much better
That's tough
question.
to say, right?
I still feel like it could be that 60 to 90 day
Really?
range.
Really?
For a neutral market.
Okay.
Because the house is still, we can still capture good pricing. Some of for instance, fall of last year, the market slowed down. Everybody was a little bit nervous due to rates. Everybody thought the market was just going to completely cliff dive in the other direction. I think my perspective was that we still didn't have inventory. We weren't going to have inventory. And so I thought that the market was still going to just adjust with the rates and our market would sustain, which it has.
Your prediction was right.
It
was
was right.
So technically,
Yeah.
we're higher.
I was right.
You were right.
That's
You were right. That's what happened.
Disagree.
Like I said, I'm not going to argue with you. We are higher because if you just take a look at chart number 4, slide number 4, you can see that we're above where we were. Green is the third quarter. We're above where we were in 2022. And by the way, that's not a full third quarter either, right? That's only as of the 20th, as of yesterday.
Right, and we're moving into our strong fall market. Kind of that summer slowdown we're leaving that in the past, and we're going to be moving into what is just historically our second strongest market of the year, which is fall. I think that we had, Jerry and I were chatting about how's the market, what are we feeling in the market right now? Yesterday my phone was off the hook with people calling, but they were
approaching 8%, 30-year mortgage.
Yes, but they were looking, the people that were inquiring to me were more on the outskirts markets because that's where there was a little bit more inventory. And so, there's just not much for sale, and I just don't think we're going to get a lot of things that are going to come to market over the next few weeks.
Can I ask a question? So in looking at one of the things when you hit that kind of 90-day mark, one of the things that some agents will do when that was the new normal is that's when you see things like price changes.
Right.
And the price. So what have you guys seen as far as if some people are fishing?
Right.
With really big prices and really big numbers
Sure.
on things that might be
testing the market.
Right, seeing what they can get.
Right.
So what have you all seen as far as when people are saying, yeah, we shot a little higher than what we wanted, and they're doing their adjustments? What's that kind of time period that you see with some of the listings? I know they don't sit on the market too long, but there's still some that,
yes.
pull that up there.
That's a great question.
Such a great question. Keith, what do you think? I always, 2 weeks, well, first and foremost, you always have to consider feedback. So immediately,
Sure.
always know what your feedback is. So if you're getting dogged immediately, then just know you're getting dogged and be aware of that. And then 2 weeks, 30 days. Those are time frames.
You
What do you
and
think?
I are seeing different numbers.
Well, that's why I wanted to ask.
Yeah.
I
Thanks
have
for
an
starting a
example.
fight.
I'll bring that up later,
If you haven't in today's market, I'm crunching that day. If you don't in 7 to 10 days have an offer, you're overpriced. Something's wrong, right? You're
Right.
overpriced. Conditions not right. Features are not. Something's not right that
Right.
needs to get fixed. We should make a bet, you and I. I think the new normal is around 30 to 40 days.
for transitioning the market.
I think neutral is going to be somewhere closer to 30 to 40 days.
I think it's really going to depend on inventory. So if we
You're making my point for me.
right. So okay. I will use 39 Bowling is a waterfront that we have pending right now. That house has been on market. Goodness, we've been on market for over 90 days. I want to maybe say even between 90 to 120. So in that zone. We are under contract. We have gone through the home inspection contingency time frame. We are statistically highly likely to make it to closing. Otherwise, I probably shouldn't be talking about the sale just yet. But we were priced for sale at $679. We reduced to $669. Then we reduced to $659.9. And I mean, we were dogged on feedback. It was rough.
Yeah.
Really bad.
I know the house well. I get it.
You know the house, and I mean, we were getting offers. They weren't in the sixes, and many offers that were significantly lower. But my client just believed that there would be someone who saw the value in that lot, and then in the potential of that property, which I completely agree with them. That lot is fantastic. And it does have the potential, I do think, to be $1 million property if done correctly. So at any rate, we did find that buyer, and the number that you will see once it actually closes, it will blow a lot of people's minds who saw the property.
For the positive?
For the positive, absolutely. For the seller, absolutely.
For the seller, okay.
And the buyer is ecstatic to be able to secure.
So this question won't get you in trouble. Is it above original list or below?
It is
Close?
well into the sixes.
Got it.
Well
So
into
you
the
did your
sixes.
job in spades. You killed it for your seller.
Absolutely. And
That's great.
we so many other agents that had gone and seen the property told them that number was not possible. But the question is, well, not for everybody to hear my strategies on the waterfront market, but essentially.
Well, look, I'll try to save you from that. It's hiring the right people, the right trusted advisors, and having the seller believe in you, right, and believe that you have the ability to navigate it through the process. And you brought data, you brought information. You probably came in a little bit too high into the market.
Yeah.
I think at the end of the day, with your skill level, you would have got to where you ended, no matter where you started, frankly, on it.
Did you start at the price you wanted to start at, or was this following the lead of an ambitious seller?
You have to take everything into consideration.
Okay.
And so sellers are the drivers, they're the decision makers. I'm very pleased that she chose the price that she chose because we were able to. I think a lot of people had told her to start in the fives, and that's where she was right. She knew, she stuck to her guns, and she was right.
So the acres at Lake Monticello is trading at 7. If you,
It's great. That's
And
insanity.
the fives was not the right starting point for that home.
Right.
Stephanie Wells
Right.
Rhodes, who's got long ties to Lake Monticello, watching the program right now.
Love Corinne.
Woody Fincham watching the program. Woody Fincham says waterfront and high value property usually sits longer normally.
Well, actually, the waterfronts that were higher valued, $1 million plus, they sold immediately. The ones that came to market, I can't think of any that didn't sell within a few days.
But they were so minimal. The amount of numbers.
There's just a handful.
Yeah.
Jeremy, you had made a point that I thought was fishing on pricing, just testing out pricing.
Yep.
I do think, especially in a market like a waterfront market that is such a unique market,
Yep.
and you do have buyers that tend to be well funded. It is a worthy market to explore pricing.
Yep.
And so, like I said, other agents said, so many agents told us we were crazy.
To Woody's point, right, at something at the more entry or the more median sales price, getting it right going into the market matters.
Yeah, I do think that what ends up happening, what can happen is you lose a little bit of that oomph, that little bit of newness to the market. What is it? I got to see it. I got to get inside. And then they're like, oh, this is overpriced and we don't even want to bother. We're just so far apart.
Well, at the end, so-called new entry level, if it's a little priced, people just won't go see it because the monthly payment won't work.
Right. Or if you look at a $300,000 house and you're priced, $30,000 over, that's a significant amount to be overpriced. So I do think this is definitely a market to test pricing. Like if you're going to test pricing, now's the time. And I mean it amazes me even what double wides are selling for. I mean, it's when you see that $200,000 price point for dumpy ones. So it is a little bit, when you do see something that's been on market for a few weeks, it does beg the question, why is it still on market? And it's typically price, condition,
Location,
accessibility.
Location, price.
All the basics.
And those homes, even right now, like the double wides that are selling at what seems like over market, those are some of the homes that give me the most anxiety as far as what I do.
Really?
Because there are inspections that are getting waived just to get in at certain price points, and sometimes those are some of the higher risks, because if not everything is disclosed and or known, then it can make it very tricky, especially on the homeowner's insurance side, because if something's found after the fact, it takes an insurable event for something to be covered. And there are some instances where if it was there before, it's like a pre-existing condition on a home.
Right.
It could be several thousands of dollars worth of fixes and headaches after getting into a new home, and it's not something that an insurance company is going to cover. It also, with some of those waterfront properties as well, I have to be very cautious with that. A lot of insurance companies are starting to minimize their risk for profitability, and one of the areas that we've seen affected the most are beach, river, and lakefront type properties. Anything that is near floodplain or certain foundations like pile and pier foundations, those are becoming more and more of a challenge to insure on a regular basis. So, and insurance companies are starting to reevaluate, and they're charging a lot more and having greater restrictions, especially like in the coastal regions. But we're not immune to it where we're located as well. And that's one of the things that I've been keeping my pulse on as well, is how those prices have changed.
Something that I got on an insurance policy one time that was so helpful was a rider for my HVAC unit, or it came with the policy. And I'm surprised they covered it, because it was a pretty old unit. I mean, nearing 20 years.
Yeah.
But it broke, and they replaced it. And I only paid $500, and the insurance company paid for full replacement of the HVAC system. So sometimes, not to pivot too much.
No, that's fine.
But thinking about that and how that's actually helped with sales. Keith, do you ever think about that as a realtor? Do you
He does the home warranty.
I do the home warranty, but part of why I want Jeremy to take a little bit of a deeper dive into that. A lot of people don't know that that's an availability, and I'm sure you talk about that when you talk to your clients, that they can do. So talk a little bit about that. I'm doing some math while you guys are doing 0 to 500 and 500 over at Lake Monticello. I think you're going to be surprised about the days on market.
So one of the big things that I want to distinguish is there is a difference. There is a coverage option that is on a homeowner's policy called equipment breakdown coverage, and that is different than a home warranty.
Right.
So I want to distinguish between those two things. So equipment breakdown coverage is part of the insurance policy itself. It is an optional coverage, and what it says is that if there is a claim that were to affect the electrical or the equipment systems of the home, they allow additional funds to replace the entire unit. The biggest example would be like a lightning strike, and it fries the electrical components of the HVAC. It would allow you to replace that entire unit as opposed to just having to fix the wiring. That's very different than a home warranty. Some people will read the equipment breakdown coverage. The HVAC breaks because it's 20 years old. That's not an insurable event, just age and wear and tear.
Right.
So a home warranty, and there's different companies out there that offer really good home warranties, are designed to cover all the equipment that is really in the home for it breaking down over time. There's normally an annual fee or a monthly fee that goes into that, and then if one of them breaks, there's a deductible that's paid and replaces the entire unit.
Right.
So that's one of the things to look into. It changes with different carriers. Like, I had access to a few different home warranty companies that I could write in addition to homeowners insurance. But I have a couple of people that I've referred business to that are very good at what they do. I'm very good at homeowners insurance, and I know they're very good at home warranties.
Yeah.
So I try not to bite off too much for what I can chew, but I know I prefer to refer to experts in those areas. But that can be something helpful because we do have new construction, but we are starting to see a lot of those homes that were booming in the 90s and early 2000s that are starting to get some of that age to them, and some of those things that are happening
We
to
have
it.
so many of that age, that type of property at the lake.
Yep.
So
Oh, yeah.
my homeowner's insurance, I think that covered my HVAC, the insurance. But talking about that plus a warranty can be helpful on properties that are early 2000s, late 90s, and
So I have a question and then an example. So how do I get lightning to hit my house? How does that work? How do I do that?
The same way you win the lottery, Keith. Do the same strategy.
I go around, hold the lightning
Yeah.
rod, hold the thing. Is
Next
that how
door,
that
stand on the
works?
roof with the
Because
coat
my
hanger
thing's
and see
about
what happens.
20-something years old. So how do I do that? But Yvonne in Houston, our daughter and son-in-law, we helped in Richmond. We always buy, particularly first-time home buyers, home warranty. This is what we do for every one of our buyers.
That's
well,
nice.
Yeah.
this weekend their HVAC system went out.
no way.
And they
Their
paid
first major repair. Welcome to
Well,
home ownership.
literally, we were half
They have
talking.
a baby.
Yeah, we were half talking about, hey, should we go halfies in on a new boat? And then, bam, there goes
The universe spoke.
the universe spoke. But the way it works is they paid $75, I think it was $85. The guy came in this morning. It was just a simple switch.
Oh, good.
That went bad. They'll swap it out, and then they'll do it. So it's really a great tool. So we use 210 home warranty, but there's different versions of it. But that's the difference, right? Or if there's a leak or anything like that, they come in and do it. You don't have to search for a contractor because they've got them already. It's online. You pay your money. They set up an appointment and they come
Right.
and
It
they
can
come
help,
and
especially
go.
those first-time home buyers, relieve some anxiety with being at their first home.
We always
and-
do it.
Yeah.
Been doing it for years.
Right. It's
Hunter Sumner's giving everybody props here. He's a realtor with Hunter Sumner. Jim Butler, one of your colleagues at
Yeah.
Goosehead, is giving you guys
Awesome.
some props. You're getting some love right now from Daniel Munez.
Hey, Daniel.
Nest, Long and Foster, and Real Estate 3 all over the feed right now.
Awesome.
Questions are coming in. I'll give a little data for folks to percolate on. 10 units for sale in Lake Monticello right now. Out of 4,300 homes, there's 10 active listings, including a fantastic one at 46 Chippewa Lane, $369,000 list price. There's 3 proposed detached pieces of property that could be envisioned if you guys want to go through the home building process. And this question's coming from Jonathan, who's watching at Zion's Crossroads, and he says, does the panel characterize this as a healthy market today? Healthy for whom is, I guess, the follow, right?
I compared to the Great Recession, absolutely. I mean, it depends on what you compare it to. I mean, I do think that it would be great for, it's really hard for first-time home buyers or not just even first-time home buyers, but just people in general to be able to afford housing right now. But when you consider it compared to rent, they're very, it's all expensive. It's not the Great Recession. We're not seeing an abundance of foreclosures. We're not seeing an abundance of short sales. I think that is truly a depressed market. This is not a depressed market, and because people are not losing their houses, people are making money. It's yes, it's challenging for those people that are needing more affordable housing. But you and I chatted about this. Our first, I remember this, I believe, tell me if I'm wrong, but the first house that I ever purchased, I was 21, and
for you.
2007, which was just about the worst year you could have ever bought a house ever. In November of 2007, like absolute height of the market. And I had a bonus room and I rented it out. And they paid $700. I think my mortgage was $1,100, and that's how I afforded my first house. And I kept that house. So many people, because I think we paid $215 at one point. It was probably worth $115. People said foreclose on it, short sell it, just get rid of it. Why would you hold on to an asset that's so under, you owe so much more than where the value is? And I kept it because we all know that time changes. Markets change, things adjust, and that house has plenty of equity in it now. We've had a tenant in there for years, and that's how we made that happen. So I just feel like it's one of those things where you just gotta like buckle up, find your solution, and go figure it out. Life. You can't let life happen to you. You got to go and make life happen for you.
And that's why you're a winner. That's
Yeah.
exactly literally what we did. You don't take a loss until you sell.
Right.
And if you can sacrifice by maybe what I did was I brought in roommates. I had a 3-bedroom, 2-bath, rented out 2 of the rooms for buddies below market rent. They won, I won, they covered my mortgage.
Yep.
And now a piece of property that if I had sold at a 40, 50K loss is now trading at 240, 245. There's no debt on it, and I don't plan on selling it.
Right.
I'm gonna pass it on to our boys.
Like, absolutely.
And one of the best pieces of advice I got was from my mentor. He owns Bill Nichman, I think, called a couple $100 million in real estate locally. And he says, people constantly underestimate the opportunity cost of buying real estate.
Yes.
The time spent on acquiring something, the heartache, the stress, the anxiety is off the charts. And we forget about it years down the road. But we should always remember that 60-day period of what we went through to buy something.
Right.
Because it's a roller coaster ride.
It can
yeah.
be.
It can be.
Yeah.
He calls it the opportunity cost of acquisition.
Right.
Never forget it.
I agree with that. It's real estate, time value money. Hold on to it. Don't let it. I mean, if you can, don't let it go. I love the idea of holding, not selling, but call me if you want to sell, or Keith. But really, when you hold on to your real estate long term, I mean, it's
Especially in this market.
Absolutely, it's one of the best ways to build net worth.
Well, if you bought in 216 in December, you're at 195, and your property's now worth 345.
Yeah, so think about per month, how much your net worth went up per month. I don't know what that is, but that's a healthy pay raise.
Or just think about it like this. The rent just on the condo that I'm talking about, and that condo was purchased 6 months before the Great Recession.
Right.
Probably the worst time you could possibly buy.
Right.
It was literally like late 2017, early 2008.
Right.
Or late 2007, early 2008.
That's when I
And then
bought.
the market tanked. And I was
Completely
sitting there
tanked.
stressing out. But $2,100 a month.
Right.
That's the rent.
Wow, that's amazing.
With a 6%, 7% escalator every year. We're talking in 1 year alone, 25 grand.
Right.
The second year, you're flirting with 60. The third year, you're at 90. The fourth year, you're at 120. By the time you get to the 6th, 7th, or 8th year, you've covered what you paid for the property.
Absolutely.
And we don't have a CPA at the table. What do you also get to do?
I mean, huge tax advantages.
There you go.
Huge tax advantages. Plug for Suzanne Real as well.
Yeah, and then so Ally Property Management, we had a bunch of rentals back before the time of great unpleasantness. We had 14 at the lake. We managed them ourselves, which was a huge mistake. And now we just have one because at a certain age you just get
Sure.
slower, right? But she manages it for us. I always forget that I have it. It's pretty awesome. Look, back to the healthy market question.
From Jonathan.
Yeah, so it depends on what hat you're wearing at that time. If you're a seller, right now it's a pretty healthy market.
Yeah.
If you're a buyer, not too healthy. And I've said it on the show numerous times, and I'd love to have Maggie's feedback on it and Jeremy's. This market that we're in right now, as far as inventory goes, I think we're 5 to 10 years out before it gets.
I agree with you.
Yeah.
Before inventory upticks.
Yes.
Before we get to something whatever we used to think normal was.
Right.
And I don't think we're ever going to get back to a normal with days on market, number of units on there. I know that's not what buyers want to hear right now, but that's the reality of it, of where we're at. Jeremy, I mean, I know because you come from a new construction background, right?
I am. I'm thinking about that, and it's interesting. I was thinking about a couple of different things as you were talking about that, and I was just going back to 2018, 2019, where prices really started escalating. I mean, escalating. And knowing some people that were buying new construction in the Crozet area, and they're like, oh my gosh, I can't believe what I'm paying for the house right now. Like, this seems ridiculous. This home was $50,000, $75,000 less like 6 months ago, and now it's that. And now they're like, holy cow, I could sell for probably $200,000 more than what I purchased it for. And it's looking like a really good deal, when at the time they were like, this might be a bad time for me to buy.
Right.
I had other buyers that were like, I'm terribly afraid in 2018, 2016, I can't remember when it was, that the market's going to change, and they could have bought a $500,000 property within 2 miles of downtown Charlottesville.
Right.
And that same home is probably twice the value that it is now. And just the second guessing that happens in this market, and really, it could be 5, could be 10 years. Like, I really wish I had a crystal ball, because
I've got it.
Because it's like, you just kind of look at it and you're like, when's it going to change? What's it going to change? Like, what's it going to take to change? And
inventory.
Like, it is inventory, and it's like, where is it going to come from?
It's not. Well, that's why
that's the problem.
You nailed it on the head. That's exactly why this is not changing for the foreseeable future.
Yeah.
We are in the reverse of what happened from the Great Recession until now, which was an entire decade of time.
Yeah. Very good.
And so we are now in the reverse of that. Builders did not build for an entire decade for what we need to meet normal demand year over year. Mm-hmm. So when we didn't have builders build, we still don't have them building. This region in particular is very, I hate to use the word anti-growth, but there's not a lot of land to work with.
I'd say that's fair. That's definitely fair.
And there's not a lot of land to work with. So it's like you've got, well, in terms of like the city, and then Albemarle County, a lot of it is
only 5% of Albemarle County for development. Chris Fairchild, Board of Supervisors for Fluvanna County, basically said on this show that there's going to be no new density in Fluvanna County.
All you got to do is look to the vote.
Yeah,
right.
They shot down.
They shot it down.
And I'll have to tell you, anybody who watches the show know I'm a housing advocate. Mm-hmm. That was the wrong approach that staff took. They should have never done that path for R4. It was only for one piece of property. What they should have done, is, if they really wanted to make an impact, is run through the process of changing the R3, which is the master plan, the PUD, or Planned Urban Development Ordinance for Fluvanna County. I don't think it would have passed. Matter of fact, I know it wouldn't have passed.
I don't think Fluvanna County taxpayers want new density, man.
Yeah, and
I don't think they do.
So the only thing that's going to happen is our taxes are going to go up.
I disagree.
You think they do?
Yeah, they
want new home development.
I take that back. They
want
commercial.
Business development. They want amenities
commercial.
And stuff like that.
We want grocery stores.
But that's not going to come unless there's housing.
I can assure you there's no.
Right. And so Fluvanna's always been this way. Fluvanna's been this way for decades and decades and decades, long before I've been alive. And so it's not changing. So when you take into consideration that outerlying counties like Fluvanna, Louisa, all of these counties that are also
Green's
Fluvanna,
there now.
Right. Green has a little bit more growth.
It has not really. No, I think.
Didn't they just approve a large subdivision?
No, they're working on it. It's Green. I think has hit a cap.
Yeah.
I think it's pretty much it. I don't think you're going to get the. But I want to ask the question a different way. Two young people, right, amongst your cohort, right, and particularly at Lake Monticello, the younger people that are your age. Are they afraid of housing, or are they want more housing?
I think that I don't think that people say they don't want housing and things. No, I'm not hearing that. It's more their concern is the burden on the schools, the burden on the taxpayer just continuing to come from real estate.
Yeah, sure.
Things like that.
90-some-odd% of it is from residential real estate.
Which is absurd.
Mm-hmm. Yeah. But here's the part, and I know this.
It's just like anything else. You don't want to, just us as investors, you don't want to put all your eggs in one basket, and that's exactly what Fluvanna has done through their real estate tax, or through tax base.
So this is going to get worse. It's the first year that my house at the acres at Lake Monticello, and I won't get my address out because I did it once before, which I got yelled at for doing. I'm actually paying the same amount of money cash as if it was in Albemarle County, literally.
What does that mean?
Crazy.
I've always been meaning to ask you that.
Like the amount of taxes?
So let's
The
not
dollars?
let's not talk about tax rate. My value of
rate.
my house times the tax rate,
Right.
equals X dollars.
Right.
If I was to take my house and put it in Albemarle County, value of that property, because it goes up,
Right.
plus tax rate would equal the same amount of cash dollars.
So that your tax bill is the same.
So the amount of I'll show it to you, Jerry. When it's
crazy.
I'll bring it in. The amount of cash that I pay in my real estate taxes
Right.
equals that if my 2 acres was picked up and my 4,000 or 3,800 square feet was put into Albemarle County, because the value would be much higher than what it is,
Right.
which is there, and times the tax rate. When you do that math, dollar for dollar, I'm spending the same amount of cash.
Which is so I absolutely,
maybe it's
I live in
$10
Fluvanna
difference,
at the
but
lake
still.
as well.
Yeah.
Absolutely love living there. It is an amazing place to live. It's an amazing place to raise a family. Love, love, love living at the lake. That is so frustrating because Albemarle County has
Way more amenities.
an abundance of amenities,
Yeah.
county parks, and then also just commercial
Right,
amenities.
stuff to do.
Yeah, stuff to do.
Yeah.
And so that's part of the reason why I like living at the lake, is because I also get Albemarle and the city of Charlottesville, and I get the lake. So that's absurd that you are paying that it would be the same, because Fluvanna does not have the same amount of amenities.
Now, it's a rarity, right? Find a 2-acre piece of property in Albemarle County, has central water and sewer on it.
Right.
Right. That has 3,400 or 3,800 square feet on it, right? When you do the search on what the value of that is,
Right.
versus what my value is, it's much higher.
The search
right?
for something like that in Albemarle County would be well north of $1 million, probably in the neighborhood of $1.3 million, $1.4 million. In
So
Albemarle
while
County.
other people are talking,
on the
I'm going to do
location,
that.
I think.
Comments, Jeremy? You got something to add?
Well, yeah, I was going to add. You just asked, like, what are my friends or my peer groups doing, and right now I'm thinking about them just as individuals. Most of them are sitting put. They're not doing anything.
Right.
A lot of them that got in at a 2.75, 3.25 interest rate, like even if they're having kids and
Yeah.
they're getting a little big for their home, they're like, we're good.
Right.
We're not going to do anything right now. And that's not helping the inventory issue.
Right.
There's a number of them, no matter where they are, they're like comfortable with their house. We'd rather do things here to fix it up and stay in place. But if they've already gotten in a home, which is one of the key things, for the most part, they're staying put unless they have the income level that will allow them to do it.
Right.
And I have had some of those that, some of them that are working in home building right now, it's been good for them. And they're like, we can afford to go ahead and we can make the move right now regardless of the interest rates. We've got good equity in our home and we're able to do this because I think we were talking with Taylor when he was on the show. Right now, you're not making a lateral move. You're going to lose something. It's going to cost you more money for the same home, or you're going to be decreasing the size of your home. So you have to be prepared for one of those two things if you're going to be moving, or you're moving areas and you're moving markets altogether.
Right.
Which has happened. I've got some friends that they lived in Augusta County and Waynesboro all their life, and probably, 8 years ago, moved to Crozet. Mm-hmm. They just sold in Crozet and they moved back to Waynesboro and Augusta County. I think they did all right for themselves financially with that move.
Right.
So there's some of those that come up, but for the most part, again, it's contributing to it. People are just watching. They're not making the move unless they have to.
Which is a point Maggie has made. I mean, if you have a 275 right here, if you have a 275 financing mechanism, why would anyone give that up?
Yeah, there's no motivation.
We'll never see that ever again.
Yeah,
Except
never
when they
again.
have to.
Right,
they have-
bingo. Divorce, death, children.
Oh God, are you seeing more divorces now? This is ridiculous. I don't know if it's us, but we're up to 6. This is our 6th divorce listing we're dealing with.
You taking
right
the
Really?
fifth? You taking the fifth on that?
I don't know. I'm talking about clients, right? I mean, are you hearing life changes a lot?
I feel like, I think divorce is up in general, right? Isn't it like 70%? I don't know what it is.
It's up in general.
It's up in general,
Yeah.
but I think Yeah, COVID probably did that.
Yeah,
So back on my
I think
house,
that's what it was.
back on my house in Albemarle County, when you plug in all the things, plus the fact that my house is over 20 years old, the median sales price is about $750. My tax value is right at $5.
Right.
So if you do all the math, it turns out that I'm not exactly dollar for dollar, but pretty damn close to the cash that I'm paying, and I don't quite have the services.
Right, you're not getting. What do you get in return?
Yeah, yeah. By the way.
Although I love Fluvanna so
But
much,
by the
so.
way, I got to add on top of that the Lake Monticello dues, which gets me my police, which gets me my fire,
Yes,
which is
right.
happening on the other
Yes.
on the other end.
I think the lake is such a unique and special place, and
Oh yeah, I've been living there since '87. I'm
Yeah.
planning on moving.
I know.
Lake Monticello, $0 to $500,000 sold year to date. There was 135 units closed. Median. So just to talk about my charts, they're all median. They're not average, right? These
Okay.
are the median. They kick out the high. The median days on market is 5. The average is 19. 500 grand and up, it's only 15 sold. So that number jumps lowers from 135 to 15.
Right.
14 days on market, 50 days is your average. So back
so
to
Woody is correct.
Woody is 100% correct.
Right.
He's got another comment coming in. Woody Fincham,
Woody's
we love
always
when you
100%
often offer perspective.
Well, I
He
have to
says-
give a shout out to Woody because the listing is purely his doing. He gave me the data to put in it. So thank you, Woody.
Woody Fincham, Fincham and Associates, A+ firm right there for appraisals. This from Woody. Fluvanna is funny. Many folks are from somewhere else, yet don't want more folks from somewhere else here now. That is so true. And that kind of coincides with what Supervisor Fairchild said about his vision with Fluvanna County. So I think that's right on point. Eric Thompson is watching the program. Eric, I did a DM with you and Keith, something for you to follow up there, Keith.
Sure.
He says it's not just new building inventory, but national monetary policies that are making raw materials more expensive. I mean, I think it's a collision of a lot of stuff.
Yeah.
And at the end of the Great Recession, we saw the small builder pretty much eviscerated or evaporated. I mean, they went away. On top of that, labor is through the roof. On top of that, land acquisition has gotten extremely expensive. Cost of goods more expensive than ever. The NIMBY mentality has gotten more momentum than ever before. Charlottesville, Albemarle County, and Central Virginia in totality are a Tony popular place to live. UVA is expanding enrollment. UVA is adding more professors. They're adding more schools. The Data Science School, the Paul Manning Biotech Institute. All this stuff is happening at the exact same time.
And what is the area median income?
Area median income, according to HUD, $123,300. I mean, this is just
crazy.
not a cheap place to live. And I hate to say this, for the folks that are watching the program, it's going to get more expensive to buy real estate. That's why
Yeah.
timing the market. I had a finance
No such
professional.
thing.
There's no such thing.
No such thing.
There was literally a finance professional that we see on a weekly basis in here made the comment to me that we're looking to wait till next year. Maybe the rates will adjust or the home values will drop. Albemarle County went up 11% year over year, and rates went up 2.5% year over year. You
Right.
can't time the market when it comes to real estate. Just get in the game.
But you know, from a buyer's perspective, one of the great things about these charts that you're showing, if you start putting them all together, you know, generally, if you're going to buy, fourth quarter is usually the best time to buy, right? Price is a little bit lower, right? There's a little bit less on the market at the time, right? So if you're like waiting to buy, you know, if you're waiting to time it at all,
Find something you want,
It-
buy it,
yeah,
and
yeah,
sit in it,
yeah.
and sleep in it, and
It's-
live in it.
Enjoy it.
He's,
Yeah.
date the rate, marry the.
No, don't put that on me. I do not like that.
I know,
I
was gonna
hate
say,
that saying.
I meant to
I
say you
hate
don't
that.
like it. You don't like
I
it.
do not
the
like
least
it.
Favorite, the least
I
favorite.
mean, I think the mortgage brokers like
Yeah,
that.
look.
Yes, exactly.
No.
To Jerry's point, the time is always now, and yes, the time was
Yes,
yesterday,
right.
right? And look, I've got a 21-year spreadsheet. I talk about this all the time. Full car footprint. The average appreciation, this is the average, in that 21 years, including the time of great unpleasantness, is a little over 5%,
Right.
year over year. Right. I think this year, Jerry and I got a bit of a bet going on here. I think this year, Albemarle County in particular, will have a double-digit inflation, double-digit appreciation, probably on the lower side, not the upper side. But
A perfect example of this, and I'll get out of your way. Maggie, you jump in here. I bought the condo at the Village of Southern Ridge at the worst time I could have probably purchased something in the history of my life.
Right.
like
Probably.
6 months
Not sure.
before a depression.
Yeah,
Like
yes.
at the peak of the market, the
Right.
worst time possible. Right now, that piece of property is up 42% on where I purchased it.
Question:
Amazing.
When did you? How long did it take you to get back to normal
It
with
took
that
a
property?
long ass
Great.
time.
10
What-
years.
no, that-
Probably 8
Yeah.
to 10 years.
Legitimately.
Yeah.
To
That's what I'm
break even.
curious. Okay.
Yeah.
Yeah.
Because like Northern Virginia, they're just starting to get some of the properties that were bought in like 07
Really?
were within the last 3 years.
I'm so
They
sad.
only hit. There's a few of them
There's
that I
a
was
few
talking
pockets
to.
in the market like
A
that.
few. No, I'm talking. Some of the ones that were being built a little further out, not
Yeah,
like right there in the city center.
Like in Loudoun, but next to West Virginia.
Yes, like when you got some of those that were built a little bit. I've talked to some relatives and some other people, and they were like, "We're just getting back to where we
Yeah.
purchased some of those." So I was curious because
Yeah.
I always said I
probably
thought
10 years.
I thought Charlottesville rebounded quicker than some of the other locations.
I do think
around.
I'm not sure all of Northern Virginia is.
Not all.
I actually would think that Northern Virginia is probably, especially when you look at like Fairfax County or I would imagine Northern Virginia probably surpassed that in a lot of places earlier, but than us because we are usually lagging behind their market. What I was going to say is this is another reason why I couldn't understand why everyone was losing it over rates. Rates during the Great Recession, during an actual true housing crisis, the worst crisis of all time for housing, rates were in the sixes, and no one was crying rates.
Mine was 6 1/8 when I bought it, and I was happy to get it.
Right.
I was doing jumping jacks. I was walking out of the lender's office. I'm
Yeah.
like, I qualified for an
For a
effing
loan.
mortgage, you
Yes,
know?
that's what I
6
thought too.
1/8. I
That's
was
what like,
so happy.
Who's giving me
That's funny.
money
Yeah,
right out
that's
of
what I
college?
was thinking about.
I should still be in
I
college.
was fresh out of college. Like, I should not be getting this.
Right, that's what I
literally
thought.
what I was thinking when I was walking out the
I
door.
know.
And
And-
this is the time Jerry
funny.
says Smith jumps in and says mine was 18%.
Right, exactly, in the 80s. And so when
Not
you
the
look,
1880s, Maggie. The 1980s.
well, it's true though because it's just again, it's you
So-
just got to work with what your cards are and figure it out.
So Northern Virginia is such a unique market, right?
Yeah,
the
it's such
election cycle really affects it, and who's moving in, who's moving out. But I just, as you guys were chatting, I just did some numbers. You know, between 2016 and 2020, the end of 2020, there was we started at 195, and the end of 2020 we ended at 245. That's roughly about 50 grand up in price. But just from 21 to now, it jumped, which is 3 years. It jumped 100 grand. It jumped from 245 to 345, right? So it doubled. The value of homes doubled in those years. So that's what you're starting
Jeremy's
to see.
point, he's exactly correct. It took a long,
Not double, it was an extra 100
long
grand.
time for the market to recover, and it did in a really short period of time.
Well, the
Like,
reason that was is the lending requirements went from
Thankfully.
this cup of coffee that
right?
drinking.
They stopped giving loans.
I know, to us.
To us.
Yeah,
no,
that's exactly-
no. They were giving loans
right.
to dead people.
They stopped giving loans to people fresh out of college that were starting jobs and had no stable
No,
sources of
nothing.
income.
But aren't you-
Literally launching
aren't-
a business out of the place.
I
Aren't
think
you
I can
glad
rent
they
this
did,
room
though?
out.
Yeah, I did. I literally did. And the mortgage broker had no idea about that. Jason, there's a lot of comments coming in here. Jason Howard on Rio Road, the king of Rio, says, pre-COVID, there were plans for a Harris Teeter and some other townhouses, among other things, for Zion's Crossroads near the Walmart distribution center. Any update on that?
Yeah.
That's up your alley there.
Yeah. So right now, it's this. I can't divulge too much, but this is the rationale why I know we're not going to get huge firms that employ lots of folks in our region, particularly Flavanna and Zion's Crossroads, because there's just no place for them to live.
Right.
And that becomes the struggle, right? And the folks that do this stuff look at their ROIs, look at their performers. They know. I can say this. There was a company I was working that was trying to get a Chick-fil-A out there. They didn't want to come out there, not because of the volume of revenue.
Because
They had-
it's such a busy corridor. Excuse me.
They just couldn't figure out where their employees were going to come from.
Right. Right.
So it's a chicken and egg thing. What do you do, right?
It's amazing. There isn't a Chick-fil-A up there.
There is not.
That's crazy.
Yeah.
I
Everything
wanted Chick-fil-A
else
for lunch today.
Everything else jived on their performer except for where my people are going to come from.
Well, in that, this is probably wrong, and I'm probably telling you something that's not correct, but I could have sworn someone once told me, I mean, it's like tens and tens and tens and tens and tens of thousands of people that drive through Zion Crossroads every single day.
Sure.
Like, I want to say like 70. I mean,
Yeah,
I don't know. It's like a crazy amount of people.
Yeah.
I mean, the state, there's what? How many people are in our state? So maybe there are that many people that
7
drive.
million. The state of Virginia?
13 million or something? 10
I
million?
think there's over 8 million in Virginia.
Yeah, 7 to 8, somewhere in that range.
Yeah,
the only
there
reason I
probably
know.
are tens and tens of thousands of people that drive through Zion
Yes.
Crossroads, which is the only place to connect the western part of the state and the eastern part of the state and the central
So
region.
somewhere between, I'd have to pull the traffic analysis.
8,642,000 people in Virginia.
Okay, I was
And
totally
the only reason I know
off.
that number is about the same as Austria.
I don't know why I
So
said
the country of Austria. It's somewhere between 15 and 20,000 a day. By the way,
People
that roundabout
Crossroads.
at 53 and 618 where Colonial Circle is,
Right.
has the same amount of traffic going through it.
Crazy.
Right. That's insane. That's people think the lake when they come, especially when they come to the lake and they drive through it. They are always thinking it's like a 500 people, maybe 1,000 people that live there or something like that, because there are no traffic signals in the lake. It's a little bit. It does feel like, you're
Lake
you're
Monticello
lost,
is
essentially.
44% of the total population of Fulton
I mean,
County.
4,300 homes at what?
It's
2.25 people
small.
per home? Is
Right.
that what you would say?
Yeah.
2.25?
It's a big
2.25
town.
is the national average. We
Basically 10,000 people at the lake?
I think
No,
the
it's just
number's
like
north of
14.
11 actually.
North of
Okay,
11?
I'm wrong.
I mean, that's a town right there.
It is.
Comments are coming in. This is from Kevin Yancey. Kevin likes to play the bear from time to time. We love you, Kevin Yancey. Watch it in Waynesboro. He says for the panel, when does the balloon pop? This type of appreciation cannot, in all caps, be sustainable. Some folks have that mindset.
I completely understand that, but the question just becomes, when does the inventory come in? A lot of people, people are saying, trying to time the market, wait for rates to drop. Yes, they do think rates are supposed to drop next fall, but what's going to happen is it's just going to, I believe that it's going to...
It's going to be a buyer frenzy.
Yeah,
It's going to put more buyers in the mix.
Yeah,
It could be more competitive next fall than it is now.
Very well could be.
You remember the insanity in middle of COVID?
Dude, if
Yeah.
rates go
It's coming.
from 7.5, let's just call it 7.5,
I think you'll be
To
8 by the end of the
to
month.
low fives
That's
next
it,
year,
yeah.
that will be insanity.
It would,
Yeah.
truly. So I don't know. I think we need inventory, and then the question is, where does inventory come
So
from?
since 1972, the average rate is 7.1%.
Oh, good to know.
Yeah.
7.1 is the average since the 70s.
And that's from Freddie Mac and Fannie Mae,
That's amazing.
which is usually most of the
so
loans.
again, the rates are completely
Well, but
in line.
folks,
Historically normal.
this
Yeah.
to Jeremy's point,
Yeah.
this 2.3% thing, is a market indicator or market item that we've never seen before,
Yeah.
and
Right.
what it's actually going to do.
Independent variable.
Thank you. It's independent variable is to do that. But look,
But it goes back even further. Like my first home that I purchased was in 2012.
Okay.
So it was a few years.
good time.
It was a great time.
very good time.
I was, again, first time home buyer, not right out of college, but I was a few years removed, and I got 4% in
Yeah.
2012. So it got low.
It was.
But it was already in that
What
time
month
period.
did you buy in 2012?
I closed in June of 2012.
I think they had just ticked, like they were in the high twos, like 'cause they were like two, maybe that was 2013, but
It had changed, but I remember, I know you were ecstatic at, 6.8? Like,
Yeah.
I was at 4, but I honestly, I was so naive, I had no idea. I was just like, awesome. I don't know what that means, but I'm glad I got 4%. I've learned now that was really good.
it's a great rate.
But that's over a decade ago that it's really been sub 5.
Right.
And there's a number of people that if they locked in, and this is one, this is a home that I kept, I sold in 2018, rolled it into a different home, sold it again in 2021, rolled it into a different one. So I used it not as necessarily an investment vehicle, but I
springboard.
snowballed. I
Right.
snowballed it got great return each time that I sold and increased because I hit it at great times.
Awesome.
2012 to 2018 to 2021 was great times to
So
sell.
this is going to
and buy
sound very counterintuitive, but Yonna and I decided not to refi our home when it was like 2 to 3%.
Why not?
Well, I decided not to do that because I ran the math and I wanted to borrow some extra cash to buy some investment property. Well, if I didn't do that,
Yeah.
what we made the decision was to pay off our principal. So we're like, we're down to zero.
That's smart.
Yeah.
But I'm glad I didn't do it because now what happens, I'd be trapped because I would have borrowed a bunch of money at 2%. My house, I would have owed more money on my house. So if I want to go sell it now, I can sell it and put all the equity in my pocket. So we just used our cash a little bit smarter
Right.
is what we did. But I'm really glad I didn't do it. I know that sounds weird. And at the time it was like, holy schmoly, we can do this. But I would have reset the loan for 30 more years.
Yeah.
Yep.
Right? I
Yeah.
was at the tail end of my 30 years on it. Right, because we expedited our payment to our principal, and I'm really, Yonna and I literally were talking about this on our walk this morning. Boy, I'm glad we didn't do that. We used our cash to do something, something else.
This may sound really odd, and it might not have been a smart move in retrospect, but when I closed in 2018, it was in December of 2018. My interest rate then was 4.875. Because if you remember the tail end of 2018, they jumped up a bit. I refinanced again down to 2.75 in that home 6 months later. It was not, it was the nearest possible time that I could refinance. It had dropped 2 whole points. Which
So
is
to
crazy.
Kevin's point, and I love Kevin to death, and be safe out there on the road, brother. There's not a pop. So when people think of pop, they think of 2008, 2009. Trust me, I know what a pop looks like.
Right.
I've lived through it. What'll happen is a little bit of air will be let out of the balloon, and the percentage increase year over year will be normal. Will
Right.
be more closer
Like
to this
6 to
5 or
7%.
3.
Yeah.
The where always matters, right? So where you are, you're going to get a little bit more. Some other places you might get a little less, or you might go negative, right?
I might disagree with you.
Really?
Yes, because I don't think the pop's necessarily going to be in housing.
Oh, well, I'm speaking housing. But go ahead.
Well, it will affect housing.
You think it's
Interesting.
commercial?
Yeah,
You
what
think
is
it's
it? I'd love to
commercial?
hear
Oh,
that.
no. Now you got my in.
It could be commercial, but so I'm in a different market. I work in a similar field, but I work in a different market.
Yeah.
So let's go ahead and take what's going on in housing right now with the increased cost of everything that's going on, with the shortage of the inventory. And I know I talked on the show when we were here last time, but what has that done to insurance? Well, in the last 2 years, there was a hailstorm. I had hail that was the size of a racquetball that hit my front yard, 3 weeks ago. If you got these natural disasters that took place in 2021, 2022, a lot of insurance companies started going from the black to the red. They started losing because the cost of rebuilding homes was so much higher, and the insurance premiums that they were taking in were a lot less than what they were paying out. So much so that in the month of July alone, Kemper Insurance has pulled out. As of November 2nd, they're no longer going to be doing home and auto. Kemper's a huge company.
Yeah.
They're still going to do their specialty vehicle, and they're going to do some of their commercial stuff. But you have a major player in the market that just said, you know what, we're not going to do personal home and auto anymore. For a lot of people,
Virginia or just everywhere?
everywhere, they're stopping.
Because they're not
Personal
making
I
enough
mean,
money.
Florida, you should depict what's happening in Florida and California.
Yeah,
But
in
hasn't
Florida and
that always
California.
happened in Florida
This is
and
crazy
California?
what's happening in
Florida
Florida.
is
kind of an anomaly.
Florida is
Yeah.
the Wild West of insurance.
Yeah.
I wouldn't.
It's an anomaly.
When people tell me, "Hey, we're moving to Florida," I'm like, I'll pray for you because I know what your insurance rates are going to do. But California, there's insurance. State Farm is not writing insurance right now in
That's
California.
crazy.
State Farm.
That's crazy.
Nationwide, as
In
of right
California.
now. In California. Nationwide, currently with their homeowners insurance, as of July of this late June, early July, they're no longer writing home policies. In the entire United States from now to the end of the year. And if they do, there is a 10-day evaluation period before you can even bind a homeowner's
And this
policy.
this is the Kenwood?
This is nationwide insurance.
Excuse me, I'm so sorry.
Nationwide.
But State Farm, I feel like, well, I guess, again, going back to Florida, they pulled out of Florida too. I feel like I've read that
It's
before.
the
So
Outer
the
Banks
point
are
you're
not
trying to
there.
make is?
But But a lot of insurance
housing.
companies,
Yeah.
a few of the
Yeah.
I'm
what
following
is
you.
happening?
Big one.
What is happening is they're evaluating.
Yeah.
Insurance companies are for-profit companies.
Sure.
They're for-profit companies,
yeah.
and if they're not profitable,
Right.
they have to make a change.
Sure.
You will see everyone on their home and auto insurance this year at their renewal, it should go up. I don't care who the company is, it should go up. It would be even my personal insurance went up. I think it went up 30% on my home and 20% on my auto.
Wow.
Those are averages. I would say 20 to 25% is the average right now. People are like, I haven't had a ticket. I'm like, it doesn't matter. You're paying for everyone else's tickets and everyone else's accidents across the country. People are getting non-renewals from companies like Progressive because they say, we've evaluated the age of your roof and we think it's time for it to get replaced or we're not going to renew your policy.
I just bought a house.
So you're
yeah.
saying your
So-
industry, the insurance industry, may end up putting a bit of a twist on this.
I'm
a
saying
little bit.
that this is a different sector that is seeing cost increases. And you
Yeah.
got to think about the consumer that's buying a home. So now not only are interest rates going from 7.5% to 8%, homeowners insurance, which on average around here is probably somewhere between, I don't know, $700 and $950. The new normal for that's going to be somewhere between $950 and $1,500.
I've already got mine,
So
by the
we're
way.
doubling
Crazy.
that.
Yeah.
You're going to get more restrictions. They're going to ask buyers to do more to their home, or they're not going to keep the policy.
I just bought a house. They wouldn't insure without a new roof.
Yes.
And it's not leaking. There's nothing
No.
wrong with the roof.
It could be
It's
a
just
30-year
age.
architectural shingle.
Yeah, it is.
And
And
it's
it's not-
20 years old,
yeah,
and the
it's not
insurance
30
company
years
says,
old. Yeah.
we don't care.
That's not who I went and got insurance through then.
So they're basically saying, go put in a $15,000 roof. Right,
And
that's what they said. to you.
I'm actually still replacing my roof, but.
But here's the thing, like even 2 years ago, you could have had, at least with my company, you would have had maybe 30 options, and you would have found the best price out of 30.
Right.
It's now probably limited to, say, 4 or 5.
Wow.
So you're just decreasing the chances of finding a better rate.
Decreasing
when
the
you're looking at that.
options, which
So-
makes things more expensive, which turns housing into a luxury. Housing is going to be it's going to turn into a luxury for the select few in our country.
So
That's what you're
it's-
basically saying.
Well, you're looking at, and we are blessed. If it's $125,000 is the average household income in Albemarle, Charlottesville area.
123.3.
That,
It's like Northern Virginia.
That's
but
pretty damn high.
even
Yeah.
if you take that, and you're like, now I'm buying a home, the price has gone up almost 75% from where it was in Lake Monticello. The taxes are going up. My homeowner's insurance is going up. And on top of that, this home was built in 1990. I need to either negotiate to get the roof replaced. If I don't have a home warranty or something like that, I might have to replace the HVAC.
Oh, yeah, it needs HVAC.
HVACs, when was the last time you replaced your HVAC?
Those are $14K now.
There you go.
Yeah.
There you go.
And if you went back to
Average house.
2005?
8,000.
Maybe.
7,000.
2005, probably 6, 7.
Yeah. So
So you're
it's,
looking
there's
at
a lot of
2X
fact-
and change.
There's a lot of factors into that, SEER rating.
A
And stuff
lot
like
of
that.
stuff
Yeah.
is going up
Yeah.
in terms of its cost. So I don't think it's necessarily
it's-
that the housing is going to happen,
Yeah.
but there could be some financial reckoning that takes place where people just
And
cannot.
to Jerry's point,
life.
all that's
Yeah.
going to do is there's going to be a cohort, a pool of buyers that can afford all of that, that are going to buy
Yes.
because, if
can.
you just take a look at the total number of sales that has happened at Lake Monticello, we're roughly at 36, right? This same quarter in 2016, we were 69, right? So we're like roughly 50% off of where we were in 2016, and it's just going to put a lot of pressure on that. So before we get off of the topic, how important credit score is to my rate going up or coming
Incredibly.
down? Yeah, talk about that. That's important.
So there's a lot of factors that go into your homeowner's insurance rate, but for individuals, the credit score, and the credit score is part of a bigger score called your insurance history, effectively. So they're going to look at everything from how long have you been with your current carrier, how long have you been insured in total, your credit score. Whenever I look at a married couple that's buying a home, I'll actually run the homeowner's insurance through both spouses' names, one and then the other. Both of them are insured, but if one's got a better insurance history score or a better credit score, it might be less expensive to have them listed first than the other. So that's something that I always check out and look into. And there's a lot of different factors that go into it. I try to ask a lot of questions. If you're talking about Lake Monticello specifically, if you're inside the gate, then that is something that can factor into your score because it's limiting certain risks that can happen to a home. A lot of insurance companies, they're worried about numbers and statistics. They want to know, again, if a roof is 20 years old now and it has an increased probability of leaking from 19 to 20 of 15%, then they might draw the line there, even if it's a 30-year architectural shingle. They're huge. Depending on the company, they don't necessarily look at an individual situation. They're looking at macro data, and they're making decisions for a financial business based on that information. So the insurance history and that credit score is a big one, and it can have hundreds, if not even thousands of dollars of impact as far as your rates go.
Sure. So my mother and father, right?
Yeah.
They're retired. They're in their early. They watch, so I got to get the age right. They're early 80s-ish. My mother's still 36, which I don't quite understand that math, but anyway, that's what's impacting them right now. They've got a little bit of a mortgage on their home, right? So, and they're able, they're just paying a little bit onto that, but their taxes are going through the roof, their insurance are going through the roof, HOA dues are going up on that end of it, and it's getting to the point that they can't afford to live in Fluvanica. Now, we're blessed; they can come live with us. But it's all these factors, and I've never really thought about it that way. So thank you for sharing that.
I mean, that example, your income's fixed, everything else is not.
Yeah.
The cost of living continues to go up, and shoot, gas prices today are what?
Flirting with
$3.79, $3.85.
Yep.
Right. They're not in the fives though.
No.
They're not in the fives.
Remember that?
But it's not 1999 where my dad used to give me $20 to go
Right.
fill up the Ford F-150 and he wanted change
Under
when I
$1.
came back. Like that was.
I don't want to tell you what it was in Southern California a couple of weeks ago when I was out there.
But I can't. But all those prices, you might say that's in California. It is affecting us. It's affecting us in a different way. So I don't think the needle can pop from a housing perspective that we had in 2007, but I would not be surprised.
It's a pressure. A pop is a very visual thing.
Right.
Right. I just think all these different pressures, but look, at the end of the day, the inventory is going to stay anemic for a very long time.
Yeah.
There's going to be enough buyers out there. When's the time to buy, Maggie?
Now.
When's the time to sell?
Now.
There
Never.
you go. Show's over. Speaking of which, we're at 11:30, and the time flies when we're having fun.
So much fun.
I did want to plug real quick, and I mentioned this earlier.
Please.
The Women's Council of Realtors. If you're involved in real estate in the Charlottesville area in any capacity, the Women's Council of Realtors is a fantastic organization. The Women's Council in general started in the 1930s, 1938. When women were not allowed to be part of the National Association of Realtors. It is morphed and changed over time. 62% of all realtors are actually female now, which is great, and there's a huge presence, not only in Charlottesville, but across the country. And the Women's Council of Realtors now is more of a leadership organization for either people new to the market or new to real estate in general. If you want to get involved, if you want to find an organization to be a part of, I am currently the membership director for the Women's Council of Realtors. I know that may be a surprise because I work in insurance.
And you're a male.
But it is a great organization. There's a number of former presidents of the Women's Council of Realtors that have gone on to be presidents of CAR. I think there's 4, maybe 5 that have done that. Their next event is going to be at CAR this Friday, the 25th at 9 a.m. If you search the Blue Ridge chapter of the Women's Council of Realtors, you can sign up there. We'd love to have you come out. We're going to be doing a panel with it'll be a title company, a loan officer, home inspector, from contract to close, some of the things that agents just need to know about or be prepared for, talking with 3 experts on that. So I wanted to plug the Blue Ridge chapter of the Women's Council of Realtors.
Look at you plugging away, huh?
That was so good.
That was great. Guys, this is the Monday edition of Real Talk. The panel was absolutely on fire. They killed it, per usual. Maggie Gunnels of the Gunnels Group, Jeremy Rowe, the Jeremy Rowe Agency, Keith Smith of Yes Realty Partners. This is Real Talk with Keith Smith, archived online at realtalkwithkeithsmith.com. It's great to connect with you guys. We tagged as many people on the panel with the comments that came in. If I didn't get to your comment or your question today, please forgive us. There was a lot of them today because of our stakeholder panel and their knowledge. Judah Wickhauer, thank you for keeping us online. The I Love CVille show is up in 1 hour right here on this network. We'll see you soon. Take care.
Thank you.
Yay.
Very well done, guys. Who's going to tell
That
us
was
when the mics
fun.
are